President-elect Trump's language has been critical of Wall Street, but big bank stocks are soaring after his victory. The gains coming on the president-elect's plans to cut taxes and promised spending, as well as roll back regulations, especially Dodd-Frank. Joining us right now is Sheila Bair. She is former FDIC chairman and president of Washington College. Sheila, good to see you. Thanks so much for joining us.
Nice to be here. You bet.
Are you surprised by this reaction from markets? Pretty positive on the heels of Trump's victory.
Yeah, no, I'm not surprised. I was more surprised by the big dip we had that recovered very quickly. So, you know, it could be a good thing. It could be a bad thing. We'll see how he does it. I think he said he doesn't want to wholesale repeal and not replace it with anything. So if we have better, smarter regulation that keeps the financial sector stable but allows them to provide more support for the real economy, that's a good thing. So
you were always a proponent after what you witnessed and what we all witnessed in 2007 and 8, and the upset that banks should have more cash, should make sure that their capital is much higher than it had been. What would be the right changes to make in Dodd-Frank without unraveling it all and make sure that the financial services sector is safe?
Yeah. Well, I think at the core should be to maintain strong, clear, simple capital standards. We have something called a leverage ratio, which I think is the best indicator of financial strength. I would like to see that higher. Some of these risk-based capital rules, so-called, I think are highly misleading, overly complex. So I would hope the core of the new administration's regulatory approach would be a strong base of capital that makes sure the banks can keep lending in both good times and bad. I know this is something that Jeb Hensarling has pushed. I don't know if it's he's a leading contender for Treasury. The press has suggested that. But the fact that Mr. Trump is apparently talking to people like him, I take it's a good sign, because I do think capital, strong capital, really needs to be at the heart of any reasonable regulatory system.
Sheila, we've heard so much about how community and regional banks are struggling with regulation under Dodd-Frank. How do you see Trump helping out some of those banks as they're struggling?
Yeah, well, there has been a lot of unnecessary overlay of regulation on the community and regional banks. They really weren't, the bread and butter banks really were not involved in this crisis or a driver of this crisis. So I think that would be a very good focus. You know, the stress testing requirements, I think you could streamline those a lot more for the smaller institutions. You know, Susan Collins has suggested a rule that just allows regulators to provide an exemption for smaller banks for many of these rules, because they really don't have anything to do with what drove the crisis. So I think there's a lot of opportunity there, and I think that's smart in terms of his Make America Great economic stimulus program, because small business lending has been a place where we haven't seen loan growth. It's still significantly below where it was prior to the crisis, and that's, of course, a driver of job creation. Those small banks do the lion's share of small business lending. So focusing on that area, I think, would be very compatible with his pro-growth agenda.
How quickly could that type of lending snap back?
Well, I know a lot of it's demand, too, and so if he's successful overall in getting the economy growing again at a better pace, that should stimulate demand, and you get into a self-reinforcing virtuous cycle. So I think it will probably take some time to stimulate demand, but on the supply side, I think there's some probably things that he could do fairly quickly. Again, I think capital for banks large and small needs to be a core part of the regulatory approach. With smaller banks, they have pretty high capital levels already.
So the Securities and Exchange Commission Chairman Mary Jo White is announcing that she will step down in January. Right. What does this departure mean to you, Sheila? I mean, one of the things that is going to happen is, obviously, when she steps down, it's thought that the rules there in the SEC are also going to be pulled back. For example, one rule that she conceived includes the curbs on mutual funds' use of derivatives and stricter controls on algorithms, off-exchange venues known as dark pools. What do you sense in terms of the changes once Mary Jo White leaves? She says she's leaving, obviously, in January, and that opens the door for a Republican appointee.
Yeah, so I'm not sure. I don't really view Mary Jo White. I thought she was pretty centrist in her policies. I mean, she was criticized on both sides, so maybe she was doing the right thing. I do think that the SEC is a challenging agency to lead. They've been having some problems for many years, and so structurally, I hope that maybe we look at the SEC and whether the SEC should be combined with the CFTC, which has more of a market-oriented approach. Some of these rules, I think, make sense. Some of them don't. Money fund reform, I think those rules, that's a good example of where we didn't take the simplest direct approach, which is just to make money funds act like a mutual fund, which they are, and float their net asset values in accordance with their underlying investments. They did a completely different approach, which I think is skewed investment, again, advantaged government debt over commercial papers. So that would be an area where I think you could do smarter regulation, but not no regulation. And I hope whoever comes in, and Paul Atkins apparently is leading a lot of this. He certainly knows what happened during the financial crisis. There needed to be better rules in place. Again, the question is how to fine-tune them, make them simple, make them clear, make them effective. Not all of these rules have been very incremental and somewhat bureaucratic. And so whether it's securities or banking, I think there's a good opportunity to review, keep what's good, simplify what's perhaps a little bureaucratic, but make sure we do have a strong infrastructure of regulation to keep the system stable in bad times, which we didn't have in 2008.
And do it with a lack of resources, frankly. We'll see if the SEC is starved.
That's exactly right. I think that's been one of the problems.
Yeah.
It is. It's a big issue.
Sheila, good to see you. Thanks so much.
Nice to see you.
Sheila Bair joining us there.